Welcome to the Deep Dive, where the show where we try to cut through the noise and get straight to what really matters. You know, every day we rely on these unseen systems, keeping us safe, keeping things secure. Think about first responders coordinating or businesses protecting critical assets. Today, we're taking a deep dive into a company that's right at the heart of all that, Motorola Solutions.
That's exactly right. And what we're doing here, our mission for this deep dive, is basically pulling out the most important stuff from their latest results. We've got their Q2 2025 press release, their 10Q filing, the detailed documents. Our job is to give you the clear picture, how they're doing, their big strategic moves, what's coming up, without you getting bogged down in all the numbers. We'll look at how they're growing, what acquisitions they're making, and what challenges they're dealing with.
Okay, so let's unpack this quarter then. The CEO, Greg Brown, he called it outstanding. Looking at the top numbers, sales hit, $2.8 billion. That's up 5% from last year. Is outstanding the right word? I mean, or is there more to it than just that top line number?
Well, it's definitely a strong start. And yeah, I think outstanding fits pretty well because, look, alongside that revenue growth, their GAAP earnings per share, the EPS, it jumped 17%. That's pretty significant, up to $3.04. And their non-GAAP EPS, which we can touch on later maybe, that was also up a healthy 10%, $3.57. So it really suggests they're not just selling more, they're doing it more profitably, more efficiently.
Right, profitability. And what about cash flow? Their operating cash flow saw a big jump too.
Huge jump, yeah. Up $92 million compared to last year, landing at $272 million for the quarter.
So what does that kind of cash generation tell us, especially, thinking about all the acquisitions they make? Are they funding these big moves mainly from operations, or is it more about taking on debt?
That's a really good point. Having strong operating cash flow like this, it shows the core business is, well, churning out a lot of cash internally. Now, they do use debt for the really big acquisitions, like we'll see with Silvus, but this strong cash flow gives them a ton of flexibility. It lets them reinvest in R&D, maybe do smaller tuck-in acquisitions, manage their debt. It really backs up that point Greg Brown made about robust demand for their solutions.
Okay, and another thing that points to the future is the backlog. They ended Q2 with, $14.1 billion in backlog, up $150 million, driven by what they called record Q2 orders. So $14.1 billion, that's obviously a massive number, but what does it really signal about Motorola Solutions' place in the market, especially compared to, say, companies with shorter sales cycles?
Oh, absolutely. A backlog that size, particularly in their world, public safety, government contracts, stuff that's often multi-year, mission critical. It shows they're deeply embedded. It gives them incredible revenue visibility, like they can plan R&D, plan investments, even hiring, with a confidence most companies just don't have. It's more than just future revenue. It's like a strategic buffer against economic swings. Shows how sticky their solutions are.
Right, that makes sense. So let's dive into the growth engines. They have two main segments, right? Products and systems integration and software and services. Where did the real boost come from this quarter?
Yeah, the clear star this quarter was definitely software and services, no question. Sales there jumped 15%, which is, a big leap for a company this size. And maybe even more impressive, the operating earnings in that segment. GAAP earnings up 24%, non-GAAP up 20%. That tells you they're not just selling more software and services, they're doing it really profitably. It highlights the value of those recurring revenue streams.
Okay, so software and services is booming. Can we break that down further? What specific areas within that segment are driving it?
Sure. They gave us some details. Their land mobile radio LMR services grew 12%. Video security and access control, that's a big one, saw a 25% jump. That includes some recent acquisitions, though. And command center solutions were up 12%, also including acquisitions. But yeah, that strong growth in video really stands out. It's clearly been a strategic focus area for them.
Interesting. And while software and services flying, the other segment, products and systems integration, was basically flat. Why the difference?
Yeah, sales there were flat overall. What happened was a slight dip in their LMR products was basically canceled out by growth in their video product sales.
Yeah.
So it kind of highlights that strategic shift maybe towards the higher margin recurring revenue from software and services, though they're obviously still strong in products, especially, again, in that growing video market.
And operating margins improved overall, both GAAP and non-GAAP. They said it was due to higher sales and improved operating leverage. Can you just quickly unpack what improved operating leverage means for listeners?
Right. So improved operating leverage basically means their fixed costs, think R&D labs, basic infrastructure, that kind of stuff. Those costs are being spread over more sales dollars. So as they sell more, a bigger chunk of each extra dollar drops down to profit. It means they're getting more efficient as they get bigger. It's a good sign of a healthy scaling business.
Got it. And it's not just numbers on a page, Ray. They had some really significant contract wins this quarter that kind of illustrate all this. Like in software and services, a $44 million command center order for a U.S. state and local customer.
Exactly. And these wins really show how critical their work is. They also locked down a $29 million deal for a P25 system upgrade. That's the digital radio standard for public safety, and LMR services for the city of Chicago. Plus, a $12 million LMR cybersecurity order in Australia for the state of Victoria.
And on the product side.
Big ones there, too. An $82 million P25 system upgrade for a whole Tri-County area near St. Louis. I mean, that's the communication backbone for police, fire, EMS across 3 counties. That's the kind of tech that makes a real difference in coordinating emergency response when every second matters.
Yeah, absolutely. They also had a $30 million P25 device order for Miami and $11 million for Las Vegas Metro Police. It's easy to forget just how much tech underpins public safety, but these deals really highlight it.
Definitely. These are major investments by public safety agencies, really underlining that robust demand the CEO talked about.
Okay, so beyond the solid financials, something that really tells the story of their long-term vision is the M&A activity, the acquisition strategy. And the huge headline grabber has got to be Silvus Technologies, right? $4.4 billion. What exactly does Silvus do that's worth that kind of money?
Right, Silvus is a really big deal. What they bring is this cutting-edge tech called MADET Mobile Ad Hoc Network. It's software-defined, high-speed wireless networking. The key thing is, MADET creates this self-forming, self-healing mesh network. Devices talk directly to each other without needing fixed cell towers or Wi-Fi points.
Ah, okay, so it works even if the normal infrastructure is down.
Precisely. Think first responders in a disaster zone where cell towers are out, or military units in remote areas, or even just setting up a secure network quickly on a large site. It allows secure data, video, voice comms where traditional networks might fail. It's really transformative for mission-critical situations.
So Motorola sees this as a new core technology alongside their traditional radio.
Exactly. They're planning to create a whole new product line called Mission Critical Networks, or MCN, integrating Silvus Tech alongside their LMR offerings. It hugely boosts their portfolio.
And how did they pay for such a massive deal? $4.4 billion is a lot.
Yeah, it was primarily funded with debt. About $2 billion in new long-term senior notes, $1.5 billion in new term loans, and then the rest came from their own cash and commercial paper.
But Silvus wasn't the only acquisition, right? They've been pretty active between mid-2024 and early 2025, especially buying companies that fit into that software and services segment.
That's right. There's a clear pattern here. They're consistently buying companies to build out their capabilities, particularly in areas like AI and cloud solutions. For instance, they bought Theatro, that's AI and voice comms for frontline workers. They got RapidDeploy for cloud-based 9/11 systems. Also 3TC software, which does control room software.
And there were others too.
Yep. Noggin for critical event management, think operational resilience, an unnamed company doing vehicle location and management solutions, and one that actually fits in the product segment, Silent Sentinel, which makes specialized long-range cameras.
So it seems very targeted. They're plugging specific gaps or adding specific capabilities to their whole ecosystem.
Exactly. It's not just buying growth, it's strategic capability building. Each piece strengthens their overall end-to-end safety and security offering.
Okay, now let's switch gears a bit to something that's been running for a while now, the legal drama with Hytera Communications, this whole thing about trade secret theft, copyright infringement.
Yeah.
It goes way back to 2017, doesn't it?
Oh, yeah, it's been a long, long battle, and a really significant one for protecting their intellectual property. You might remember the big initial jury award back in 2020, $543.7 million.
Right. Where does it stand now?
Well, more recently, July 2024, the Court of Appeals basically upheld most of it. They affirmed $407.4 million in damages. They did send some bits back for recalculation on copyright damages and asked the lower court to reconsider an injunction. But crucially, Hytera tried to take it to the Supreme Court, and the Supreme Court said no. That was back in February 2025. So that really cemented the win for Motorola Solutions at the highest level.
And are they actually seeing any of that money yet?
They are, yeah. Some partial payments have started flowing. They got $61 million out of escrow in November 24. Then another $10 million came in March 25, $10 million in April 25, and then actually another $41 million after the quarter ended.
Yeah.
So it's starting to add up. There was also that contempt ruling against Hytera back in April 24 because they weren't making royalty payments and were pursuing related lawsuits back in China. That led to a worldwide sales ban, though it's currently on hold or stayed.
Okay, but here's the part that seems, I don't know, even more intense. Beyond the civil case, Hytera actually pleaded guilty in January 2025 to a federal felony for conspiracy to steal trade secrets.
Yeah, that's the really dramatic turn. A criminal guilty plea. Sentencing for that is set for November 2025.
Wow, so that's huge, right? Way beyond just owing money.
Absolutely. It's a major validation at the federal criminal level that serious IP theft occurred. And just as a side note for you, it's important to understand how Motorola accounts for all this legal stuff. They actually exclude the Hytera-related legal costs and any gains from these payments from their main non-GAAP financial numbers. They do that so you can get a clearer view of how the core business is actually performing, separate from these, significant but sort of one-off legal events.
Makes sense. Okay, looking forward then, no company operates in a bubble, right? What about headwinds? They mentioned global tariffs, supply chain issues.
Right. They acknowledge the whole global tariff situation is, as they put it, complex and evolving.
Yeah.
And that leads to elevated volatility and uncertainty around the supply chain.
So what are they doing about it? Are they expecting costs to go up?
They are expecting increased costs for materials and components this year, 2025, because of all that. But, and this is key, they also said they expect to substantially mitigate those increases. That suggests they've got plans in place, maybe working with different suppliers, maybe locking in prices, diversifying where they source things to manage those cost pressures and protect their profit margins.
Okay, so despite those challenges, their outlook, their guidance is actually pretty positive.
Very positive, yeah. For the next quarter, Q3 2025, they're forecasting about 7% revenue growth and non-GAAP EPS between $3.82 and $3.87.
And for the full year, didn't they actually raise their guidance?
They did, which is a strong signal, especially when some companies might be getting cautious. They bumped up their full year 2025 revenue forecast to around $11.65 billion. That's up from $11.4 billion before. So now they're expecting about 7.7% growth for the year, up from the 5.5% they previously guided.
Yeah.
And the non-GAAP EPS outlook is also raised now $14.88 to $14.98, up from $14.64 to $14.74 previously.
And does that include the impact of the Silvus acquisition?
It does. They specifically mentioned that the new outlook includes about $185 million in expected revenue just from Silvus. And they also raised their expected operating cash flow for the full year to $2.75 billion. So yeah, all signs point to continued strength based on Q2.
Okay, one last thing. There was mention of new legislation, the One Big Beautiful Bill Act, enacted July 4th, 2025. Sounds like it could impact corporate taxes, international tax rules. Motorola Solutions is still evaluating it. What kind of things might they be looking at there?
Yeah, that's pretty typical when major tax legislation passes. For a big global company like Motorola Solutions, they need to really dig into the details. It could affect anything from their overall corporate tax rate, how they handle earnings brought back from overseas, maybe incentives for investing in certain places. They'll be modeling out the impacts, figuring out how it affects their financial planning, maybe even strategic decisions down the line. It's just another factor they have to navigate. So yeah, if we kind of wrap up this deep dive on Motorola Solutions Q2, what we really saw was, strong financial results. That software and services segment is clearly powering a lot of the growth. Their acquisition strategy is very focused, very strategic, obviously highlighted by that huge Silvus deal, building out that end-to-end safety and security platform. And then, of course, the ongoing Hytera legal situation, which continues to move in their favor, reinforcing their IP rights. And looking ahead, despite some potential headwinds, the outlook is definitely positive, with that raised guidance showing real confidence.
Right. So the big takeaway for you listening, as Motorola Solutions keeps weaving in these advanced technologies, AI, these mobile ad hoc networks, MNet, into really critical infrastructure, think about how that might do more than just enhance safety. Could it fundamentally change how communities, how businesses communicate and respond? What new possibilities, maybe even what new challenges, could come from these super interconnected intelligence systems? Something to think about.